Folks, back to normality stocks are jumping on change in sentiment. That's what we're going to talk about in today's video. Now, last year, folks, it's been a roller coaster. Stay-at-home stocks making 52 highs for majority of 2020. And those same stocks are now breaking down. I mean, look at this. Zoom. Look at that. That was a top stock. How about Datadog? How about Teladoc? Those are three of my top stay-at-home stocks, all breaking down, making 90-day lows. But there's a silver lining, and that silver lining is back to normality stocks are starting to come out of the shadows and bounce back to fresh swing highs. First and foremost, new cases of COVID, coronavirus, whatever you want to call it, are declining in the U.S., according to latest data from the Center of Disease Control and Prevention. Second, the vaccine rollout is very encouraging, and it's giving everyday folks the peace of mind of knowing they're protected, which leads people to start living their life the way they did before all this COVID mumbo jumbo started. And that's why I want to focus on stocks that are thriving or were thriving before this pandemic single-handedly suppressed a booming economy. Now, keep in mind, the first thing that impacts the price of a stock is not the fundamentals or world events, but change in sentiment. And that accounts for a huge percentage of the price move. Only then, after that move, or while that move is taking place, investors and fund managers consider the fundamentals and other aspects of the trade. That means there's plenty of times for these stocks to trade higher, assuming COVID is going to become history very soon, before we get stuck with their fundamental picture in place. And that's the best time to jump on the bandwagon when momentum and sentiment is driving price. So let's talk about these three stocks that I'm looking at right now. First stock is Darden Restaurants. Now, this restaurant holds Olive Garden brand, Longhorn Steakhouse, Cheddar Scratch Kitchen, Yard House. I love the Yard House. The Capitol Grill, great place. Season 52, Bahama Breeze, and Eddie V's. Now, Yard House is a great place. I go there all over the place. They have them in other states other than Florida. Now, 1 year return, 165%. 4 quarters of better than expected earning numbers. 11 strong buy recommendations, and a price target of about $160, which is right here. It's now at $147 over the next 10 weeks. Next stock on my list, MGM International. Now, most people know MGM. They've been to Las Vegas, but they own Bellagio, MGM Grand, Mandalay Bay, the Mirage. All those properties are owned by MGM. And guess what? Stay-at-home economy no longer. People are going out. They want to go to Vegas. They want to gamble. They want to fly everywhere. There's like 30-40% COVID vaccines already in this part of Florida. People want to go out. They want to go back to normality. Now, I love the technical action on the stock. It's trading above the 50-day moving average. It's pulling back, and it looks like it's ready to go higher right now. The company's got their hands in everything relating to casinos, hotels, dining, entertainment, retail. Stock is up over 200% over the last year. That is good. Now, 200% for a stock that hasn't had any business pretty much in 2020. 3 quarters of positive earnings surprises and a price target of about $46 per share over the next 12 weeks. That's a full quarter. But I think we're going to bounce back and we're going to go higher to the next level up. And finally, how are we going to get to Darden's? How are we going to get to MGM? By traveling. Save Spirit. Now, so you know, this is an airline company. It's a discount airline company. They are based in Fort Lauderdale, and they provide air travel through Florida, other states, the Caribbean, Latin America. There's going to be a lot of travel there. It's a Russell 2000 stock, which means it's a small cap, and that means it can really move. And it's been giving us about 153% return over the last year. It's trading currently near a 1-year high, and it's got a really strong relative strength in comparison to other stocks. Now, moreover, as in most industry, when they're in a recovery phase, the discounters tend to be the first source of cash flow. And in this case, Spirit it's a discount. It's a cheap air flight, which is based on the current economic conditions of millions of Americans that are looking for a cheap flight. to get out, to move around. The stimulus money is going to go back into the economy. This is an obvious first choice for air travel across the country, parts of Caribbean, Latin America, which are both reopening, folks, in the very near term for air travel, especially with this travel passport business and the Biden administration is currently working on, which will increase safety, decrease COVID infections by restricting travel with people that have COVID. Anyhow, the price target is $45 over the next 10 weeks, and I think we're going to reach there if we have a nice juicy move, especially with earnings coming around the table. So if COVID infections continue to decline, summer travel is right around the corner. We're already in March. Actually, we're going to be in April in 2 days. So again, I like these stocks. Save, MGM, Spirit's ticker symbol SAVE. And yeah, you save when you buy through Spirit. It's a low-cost airline. I remember my mother-in-law used to always try to buy those tickets for my kids when we moved into LA and fly out to Houston. I was like, what is this yellow ticket? And I was like, it's Spirit Airlines. Anyhow, I'll save that for another day. But MGM was in the toilet a year ago. Now it's making one-year highs. Spirit Airlines, in the toilet a year ago. Now making all-time highs. And Darden, well, people are going to keep eating. And they've got some really good brands. And my top 3 stocks about a year ago, give or take, Zoom, in the toilet. D-Dog, in the toilet. DocuSign, in the toilet. Hope that helps.